Bienvenidos de nuevo a la hora NEA. Hoy 9 de septiembre, siendo las 18 horas. Como siempre, pedimos desactiven sus micrófonos y sus cámaras para poder tener una grabación de este evento nítida y podamos compartirla con todos. Hoy tenemos un evento muy internacional. De hecho, en un momento más vamos a empezar a hablar, vamos a switchar al inglés en un tema bien importante y bien interesante, que en medio de esta nueva normalidad que se está dejando aparecer en todo el mundo, creo que puede representar uno de los importantes detonadores para la economía de nuestros países y de México en particular. Pero no quiero seguir adelante sin antes agradecer la participación de 4 organizaciones que se han unido a NEA en esta labor de comunicación, de compartir el conocimiento y que a la verdad nos ha dado mucho valor a todos. Estas organizaciones son el COMCE, Consejo Mexicano de Comercio Exterior, que dirige Fernando Ruiz Huarte. Si estás por acá, bienvenido y bienvenidos a todos los miembros, socios del COMCE. Del Club 51, dirigido por Eduardo Vázquez, bienvenidos todos miembros del Club 51. De FENC, importante organización financiera internacional. Sergio, bienvenido y bienvenidos todos nuestros asociados de FENC. Y Mundo Ejecutivo, dirigido por el licenciado Walter Coratella, que también nos ha permitido compartir esto con sus asociados. Bien, en este contexto, el tema para hoy en inglés es London as a Partner in the International Capital Markets. Y aprovecho el haber mencionado este título para switchar ya al inglés y darle la bienvenida a nuestro presentador de hoy. Él es Chris MAYO. Chris, welcome to our presentation, our audience today. And let me introduce you to our audience. Chris MAYO, he's a chartered financial analyst, head of primary markets for the Americas at the London Stock Exchange Group. Chris helps companies and investment managers from the Americas to access capital through corporate equity, debt, and fund listings on London's public markets. He has more than 20 years of corporate finance experience in New York and London for Barclays, Salomon Smith Barney, Citi, and Schroders, and has executed IPOs, financings, and mergers and acquisition transactions in the US and Europe worth tens of billions of dollars. Previously, Chris was the primary market specialist for the London Stock Exchange Group on the technology and life science sectors, and was also an investor and head of strategy for an early stage cloud management services company, which exited to a UK technology company. He holds a first-class honors bachelor degree in international business and German from the Aston University. And also he holds a master's degree in international relations from Columbia University. Chris, welcome to NEA, and the mic is yours. Thank you.
Oh, thank you very much, Jesus. Thank you, Rodrigo, as well. Thank you for that very kind introduction. I'm going to try and share my screen because we have a presentation to give you. So hopefully this will work. So let's see if this works. Yes, I think it has worked, which is great. So hopefully you can actually see the presentation in front of you. So the way we're going to do this today, and just I want to give you a little bit more background, is, obviously Jesus has given my bio and what my background is. Just to give you a little bit of context about the London Stock Exchange in the Americas, because I think it will be surprising to a number of people, is that LSE actually has more than 700 people in North America. That includes Mexico City, by the way. So we actually do have an office in Mexico City, because we actually own a number of businesses which are relevant on a kind of a global scale. I think the exchange businesses, but also we have a very notable index business. So you may be familiar with the Russell 2000, and that is the main small cap index in the US, and that is actually LSE Group's product. We own Russell, who actually produces that index. And we also own London Clearing House, which is the biggest clearer of interest rate swaps by far in the US. So the Americas is a really important jurisdiction for us. Now, Wendy, who's my colleague, and I are going to talk about the listing business. We're going to talk about both IPOs and also secondary listings for existing listed businesses, be those businesses in the US, Mexico, Canada, Brazil, wherever they may be. So we're going to look at kind of across the board in terms of size of companies. We'll talk about very small companies. We'll talk about large companies. We're going to talk about a number of different sectors, because the applicability of London for companies really is across the board. It is across the market cap range. It is across the sector range. We'll probably hit specifically on a couple of specific sectors that I think are very relevant to Mexico and Latin America. We're going to talk about natural resources, both oil and gas and mining. We're also going to talk about tech and life sciences, because that's where we see the biggest opportunities from Latin America in particular. And so what we're going to do is walk through a presentation. Now, I've got a colleague of mine, Wendy Huang. You can see her name and her title there listed on that cover slide. Wendy's going to walk you through the first section of the presentation, then I'm going to take over. But perhaps it'd be a good idea for Wendy to introduce herself, and then we can start walking through the presentation. Wendy?
Hey, everyone. Can you hear me okay? Okay, great. Well, thank you for your time. It's a pleasure for me to meet you all here. So I've actually joined Chris's team as a business development manager here based in New York, when we're all back to normal. And so I joined in February of this year. Previously, I was 8.5 years as an equity salesperson at Société Générale, which is a French bank, primarily focusing on clients in the US, selling equity research, but also cross-asset research, ESG research, quant research, and the like. So, pleasure to be speaking with you today, and I'll go through the presentation now. Chris, would you mind maybe putting that in sort of full screen mode if possible, or if not, we could just go through it.
One second, Wendy. Actually, on my screen, it is in full screen. So let me just toggle out and make sure that's the case. 1 second. Escape. That's strange. Just trying to change this to be, this will work, hopefully. Let me just unshare, and I will reshare. 1 second. There we go. That should hopefully. So are you still seeing the partial screen version, Wendy?
I actually don't see it at all now.
Okay, that's fine. Let me just.
We'll take the partial screen version.
Yes. Okay, let me just try again. I will try again.
Okay, perfect. It's still the partial screen version. I think
it's where it is on my screen. Actually, it's displaying as the full screen version, which is odd. So I don't know why that is. That is
It
strange.
looks like people can see it fine. So perhaps we could just try to run with it. If there are any, I don't think there are any slides where the text is too small, if I remember correctly.
So the question is, Wendy, which slide are you seeing at the moment?
I'm seeing the third slide right now, which is fine.
Yeah, the weird thing is I'm only seeing the cover slide. I don't know why it's not displaying properly. Just 1 second. I'll try this again. I may come out of the thing and come back in.
Armando has kindly told me I can adjust the size of my screen, so it's perfect. I can zoom in, which helps.
Yeah, but the problem is I can't move on the slides because I'm actually moving on and they're actually changing on my screen, but they're not changing on your screen, are they?
No.
I'm actually moving the slides forward and they're not actually changing. I can actually see that which is odd. I'm not sure why that is.
We're on the menu for the.
Okay. So I've just went to full screen mode again and it's still not showing it properly.
No. Do you want to maybe try it in not full screen mode and then try to scroll from there?
Okay. So I'm just in. Can you see what I'm doing now?
Yes.
Yes, you can, can't you? Okay. So what I'll do is I'll increase the zoom a little bit. Don't know why that. Does that help?
Yes, I think it helps.
Okay. Right. So why don't you begin with that slide?
Sounds good. We'll have to make do in this new age of technology. So this slide basically just highlights some of the key themes that we will discuss today. Highlights on why it would be interesting for you to list in London. So we will go through each of these. I won't discuss in detail right now, but the key thing here is London is one of the most active exchanges globally, but it is the most international exchange for IPOs and also the #1 for cross-border IPOs. If you list in London, you'll have a broad and deep access to the high-quality institutional investor base. There tends to be a bit longer term in their holding periods. And one key distinction of London versus the US, which we'll delve into more detail later, is that London is really a more supportive venue for companies of a smaller size, of more small and mid-cap size, whereas in the US it tends to be a bit more skewed towards larger companies. And because of that, we were able to attract even some tech and life sciences companies from the US to list in London. There's also typically a much lower cost of completing a listing in London and also maintaining a listing in London as well, and also lower litigation risk. And there's some quite interesting stats that I will show you on that later. And then Chris will then discuss a bit on just the strong natural resources sector that we have listed in London, including some from Latin America. Next slide, please. So London is, by far the most active equity market in Europe. Globally, we're #4 in the first half of this year, but sometimes we're #3, but we're often in the top 3 or 4. There are about $30 billion of capital raised in London through IPOs and follow-on offerings in H1 of this year. And this is 3 times more deals and also more in terms of capital raised than the next largest exchange in Europe. Next slide, please. So this slide, I think, really shows just how active London is in terms of the level of activity that in H1 of this year, despite the global pandemic, there were over $26 billion were raised in capital over in follow-on issuances. So this just really demonstrates the value of being listed and being able to tap the public markets for capital even after the initial capital raised at IPO. And you'll see on the right-hand side that this capital is raised by companies in every sector as well. So it's not primarily focused within a small number of sectors. Next slide. Okay, so here you'll see that London is the most international exchange. We have more there are more international companies listed in London than on any exchange, and this includes those from the US. And 30% of the cross-border IPOs that were cross-border IPOs globally were actually in London in 2019, and there's been 52 listings from the Americas actually since 2017. And by international companies, we define that as companies where the primary country of business is not in the country of the country of the exchange. Next slide, please. So I think this is a big value of being listed in London, where while if you list in London, you would think that you would obviously access the UK investor base, but actually you would be able to access quite a geographically diverse investor base as well. About 30% of investors in London listed companies are actually from North America, and you get on average 15% from Europe and 6% from the rest of the world. Whereas if you take a look at the U.S. exchanges, NASDAQ and U.S. Stock Exchange, the investor base there is primarily domestic, about 85% from North America. So you could really diversify your investor base by listing in London. So if you take a look at the left chart here, you'll see that the number of cross-border IPOs have actually had a significant increase since 2017, and London is really the leader here. If you take a look at the right chart, and exceeding even the New York Stock Exchange and NASDAQ in terms of cross-border IPOs activity. And here's a list of just a few high-profile companies that have chose London for a listing, and this really is broad in terms of market cap, size, in terms of countries as well, and not only that, but you'll see that there's a number of various exchanges that these companies have been listed on, and they chose to add a London listing for a number of benefits. One that I will point out is RHI Magnesita, which is a Latin company as well. So actually, RHI is a Vienna company. Magnesita is a Brazilian company that's incorporated in Sao Paulo. After the merger took place, the company actually they delisted from Sao Paulo and reincorporated in the UK, and then added a listing in London as well. And they decided to do this because a lot of their clients and peers were actually listed in London, so it just made more sense for them to list in London instead. Okay, so this slide here will show the breakdown of the Latin American issuers that we have in London. So we have 32 companies from Latin America listed in London. This is out of 129 companies from the Americas. And the 32 companies make an aggregate market cap of 34 billion. And you'll notice that the majority of the companies are in the natural resources sector at the moment, and the largest ones are primarily in the basic materials sector as well. Mexico is actually the third most represented country behind Brazil and Argentina. Okay, so this slide gives a good comparison of the UK capital market versus US, LATAM, and Canada. So now capital markets are the same. So the US is actually it's much larger compared to the UK, of course. But if you take a closer look, the UK is actually has many more a high percentage of international IPOs. But if you delve deeper into the size, actually about 80% of the IPOs that happen in the UK are below 500 million market cap, which shows the emphasis on the smaller companies that are able to get listed in London. And if you go even further down, a good majority of that is actually even smaller, below 250 million market cap, whereas in the US, the focus is a bit more on larger companies. In terms of, so if you take a look at just the IPOs as well, this is another good chart that shows what I discussed before. So London, there are two main segments to the London Stock Exchange. There's the main market and the AIM market, which is alternative investment market. And the AIM market is actually more considered our small cap market. So while Nasdaq is typically seen as more the market for growth companies, but if you take a look at the size of the companies that IPO, London really fits a small market cap range than Nasdaq and even in LATAM exchanges. And here's another way to view that as well. So if you take a look at not just average market cap at IPO, if you take a look at just average market cap of listed company in general, Nasdaq, which I mentioned, often seen as the growth exchange, but the average market cap of a listed company on Nasdaq is actually $5 billion. So it's not as small as you would think. Whereas, on the main market, which is our larger market, it's $4 billion, and on AIM, the average listed company is actually only $130 million market cap. So that's quite small, and it really shows that London is quite a supportive market for smaller companies, and you can be listed and access public capital at a much earlier stage of your growth than you can on the U.S. exchange. Now this page right here is actually quite an interesting analysis. If you think about all the deals that are in a much more and how active the U.S. Markets are, if you delve deeper into it, suppose we take a look at companies that are at a sub 1 billion market cap range, and you take a look at the sectors that those companies belong to, you may be surprised, or maybe you won't. You're not surprised to find that actually 86% of those companies are either in the financials or healthcare sector, and SPAC and biotech make up a lot of this as well. So if you're in another sector, then chances are it may have been harder for you to raise capital in the U.S. Whereas if you take a look at the UK in H1 of this year, surprisingly, you would see that 6 sectors were able to raise between 9 and 12%. 9 to 19% of capital each. Actually, the capital raising ability was much more broad in terms of sector focus in the UK. Okay, and this is quite an interesting slide as well. I mentioned that UK is typically a much lower cost of listing and also maintaining a listing. So this left chart here will show the underwriting costs, underwriting costs. It's about roughly half of that of the U.S. exchanges, and this is just the IPO cost. Post IPO, there's actually it's actually typically lower cost of maintaining a listing as well, and we can discuss why in probably the next slide. But here, in terms of litigation costs, you'll see that litigation costs much more. It occurs much more frequently in the U.S. versus in the UK. It's just typically not part of the culture for litigation to occur. So we took a look back in history. We only found 3 class action lawsuits against UK listed companies over the last 10 years. Whereas in H1 alone this year, we found 182 new class action lawsuits filed in the U.S. against U.S. listed companies. I mean, these stats are it's just quite eye-watering. Here you'll see that well, as I mentioned before, in terms of ongoing costs. So in the UK, and Chris will discuss this a bit more later as well. But in the UK, companies are required to do just a half yearly reporting. They can do more frequent reporting if they like on a quarterly basis, but half yearly is only required. In the US, quarterly reporting is required. So that also adds to the cost of maintaining a listing. In terms of the actual listing itself, the UK process has some significant advantages in terms of the price discovery mechanisms would lead to less risk of IPO pop on the first day of IPO. So while it sounds great to have your company listed and rise up surge up a high amount on the first day, actually that would cause you to leave money on the table. So in the US, we actually found that about 73 companies had seen their share prices surge up over 50% on the first day of IPO, whereas there were no cases of that in the UK. And about 190 companies saw their stock go up 25% on the first day of IPO, versus 16% 16 in the UK. So while there are more companies, more deals in the US in general, the difference in the UK and the US IPO profits just cannot be explained by just the sheer amount of there being more deals in the US. In the US, it's probably like 3 to 4 times more deals in the UK, but this is a big difference. And the reason for the occurrence of IPO pops in the US is that it just doesn't quite happen in the UK due to much more sophisticated price discovery mechanisms. Deal research is allowed in the UK, so therefore companies are able to get investor feedback on pricing, expectations of pricing before the deal's price, and therefore that allows for just better price discovery. Okay. So here's a very interesting timetable where you'll see that there has been a significant increase in the companies from Toronto that have cross-listed in London in the last few years. So there's been a surge in this starting in 2017. We actually had one this year as well, AEX Gold, that cross-listed at the end of July this year. And that's quite an interesting one because for a $100 million market cap company, they were able to raise a little over $50 million when they cross-listed. So that's quite an interesting example there. Next slide, please. Actually, in the next section, we show a number of interesting case studies from the Americas. I won't go into all of them, but I'll pick and choose a few to discuss. So RHI Magnesita, that's the first one there. The logo is very small, so I'm not sure if you can see it. But the next one, Petrotal, is quite an interesting one as well. It's an oil and gas company, cross-listed over from Toronto. Most of its assets are in Peru. And the interesting bit about this is that they were able to raise capital during the midst of the COVID pandemic. I think they raised about $17 million, and for a company of that size and for a company in the energy sector, given what the oil price has done during the crisis, is actually quite impressive. Next slide, please. Okay. Renalytix is a very interesting case study as well. This company, kidney diagnostics company, actually IPO pre-revenue on our AIM market, and they raised about $30 million at IPO, IPO'd at about $81 million, and actually then just 9 months post IPO, they were able to do another follow-on offering and raise another $17 million. This is all pre-revenue. They're actually just pending FDA approval this year. And just in a couple months ago, they announced that they would dual list on NASDAQ, which they did in July this year, and they raised another about $85 million in the global offering. So, and all this while still pending FDA approval. So this shows that that the AIM market could be a stepping stone for an eventual listing on NASDAQ too, if you'd like. But really, that AIM is just earlier stepping stone given the support environment for companies at a smaller size and earlier stage in their growth cycle. Boku is an interesting one to point out as well, given this is a good example of companies being able to a good example of VCs being able to sell down at the IPO stage. So about 2/3 of the proceeds raised at IPO were actually secondary, whereas in the US it's almost frowned upon for it's not quite popular for secondary sell down to be done during IPO, but in the UK investors are much more receptive to that type of thing. So Boku, which is backed by a number of very well-known VCs, were able to sell down a bit at IPO and also sell down around a year after IPO as well. And they managed to make a couple of acquisitions with the follow-on money raise as well. Next slide, please. Now, the diversified gas and oil is a very impressive case study. It actually listed on our AIM market at quite a small size. It was only $86 million at market cap at IPO. An oil and gas company that then did 5 follow-on offerings and raised about $800 million for acquisitions, about 11 acquisitions that total $1.8 billion. Since then, early this year, they announced that they were going to move to our premium segment of the marine market, and now the market cap is about $1 billion. So this really shows that AIM could be the investors that are in AIM companies are receptive to companies using capital to execute acquisition strategies as well. And RHI Magnesita I had mentioned before, but here I'd really just wanted to point you to the interesting geographical split of the shareholder base. So you can see that you're for a company that is in Brazil, they were able to access 66% of the investor base is now Europe ex UK, 21% UK, and you still get some amount in North America. And now I will turn over to Chris to talk about our natural resources sector.
Great. Thanks, Wendy. That's really helpful. So hopefully you guys, that was still clear, even though we had a little bit of a hitch with regards to, with regards to the presentation. I think it hopefully is still clear on my screen. Unfortunately, for some reason, I'm able to share full screen and change the slideshow for you, and it just doesn't show up a slideshow on what you're viewing, which is a shame, but hopefully you can see enough of this. Now, I want to talk about the natural resources sector, which is both mining and oil and gas, because London historically is very strong in this area. Miles Lewis is on this call, is somewhat of an expert in this area from Strand Hansen, so he can talk about this probably at length as well. But what I want to get across to you today is that London is attracting a lot of interest from Latin American and indeed North American focused mining and oil and gas companies who see the opportunity to list in London and access a broader and deeper investor base. And this is one of the reasons why we're actually seeing a lot of companies dual listing from Toronto at the moment. And this isn't, I think there's a view, certainly when I ask some companies, oh, London's only for big companies. And actually, that's not the case at all. If we take the example of AES Gold, which Wendy's already mentioned, as she said, that was about a $100 million market cap, and they were able to raise $50 million actually 6 weeks ago by listing in London. So I think that London really does cater to all sizes of companies. I want you to keep that in mind as I go through this, because I want to talk about some big companies too, but actually London does cater to some pretty small companies in the mining sector as well. So let me just move through these slides. So London's home to 2 of the five largest companies in the mining sector. London is also the biggest by proportion of market cap in terms of the size of its mining sector in the world. So we clearly have lots of large mining companies, and mining is a very important part of our market. Just to kind of give you a flavor for how this is distributed, we have companies from general mining, gold, iron, and steel as well. And then I think the bottom left chart really gives you the idea that I was trying to get across, that the market cap range that we cater for is really from very small to very, very large. And so we can cater to all kinds of companies from a mining perspective in London. We have companies listed on both AIM and the main market. AIM tends to be, and I'll talk a little bit about the differences between AIM and the main market. Wendy and I are agnostic about that. They're both, AIM and main market are both under London Stock Exchange umbrella. I'll talk a little bit about the differences a bit later. But AIM tends to be the home for smaller companies. As you can see, we have 104 mining companies listed on AIM, and they have total market cap of about $9 billion, whereas on the main market, we have 61 companies, which are much, much larger in total. And obviously, you've got BHP and Rio Tinto, which I talked about. Finally, again, just to reiterate the point that Wendy's just made, the geographic breakdown of metals and mining investors is very broad in the UK. So you can get access to UK investors, you can get investors to access to US-based institutions, but also those in Asia and also elsewhere in Europe. So London really does offer broad-based geographic access to an investor base. This really kind of, this next slide emphasizes that, and it gives you an idea about the top 10 institutions which are investing in LSE listed metals and mining, and those are people like BlackRock, who are the biggest asset manager in the world. Then you have more UK focused investors like Legal & General and Schroders, who are both headquartered in the UK and predominantly focused on UK equities. But then you can see it's really something that is really across the board in terms of the geographic spread of that investor base. And let's talk about some of these listings. One thing I think to mention here on this recent metals and mining listings is that, again, there's a broad kind of distribution in size. One that's not on here is a company called Yamana Gold, who have announced they're going to list in London. They're listed on TSX and NYSE. They have a market cap of about $6 billion. They are likely to list on LSE's main market on the standard segment in about a month's time, and they are focused on Latin America. So their biggest assets are in places like Brazil, and they are a gold mining company, and they see an opportunity to access UK generalist investors by adding a standard listing in London. So that's a $6 billion company. But then, as you can see, a lot of the companies here on this list are pretty small. So we can cater to all sizes of companies. And we do have some companies that are focused, obviously, on Mexico. Bacanora Lithium is an example, but also one that's much larger, which will probably be familiar to some of you, is Fresnillo, which is a company that's focused on the silver market, which is where its assets are entirely within Mexico. So we obviously have a lot of exposure to Latin America through our mining universe in London. We're also very big for energy. So obviously energy has taken a bit of a battering during the COVID crisis. It's still the second biggest sector in London by market cap, even after everything that's happened. So I think that's kind of extraordinary to think about. We have some very large companies like BP and Royal Dutch Shell, but I'd just like to talk about some of the smaller ones. And again, this really gives you an idea, this next slide, of the distribution. We do have a lot of smaller companies. So for instance, by the number of companies, the biggest amount we have is actually in the $10 to $50 million range, where we do have E&P companies that are obviously looking for oil. And obviously we have some very large producing companies. What I would say is we've had a number of companies that were already listed in the US and Canada that decided to add a London listing. So examples would be Cosmos Energy, Gran Tierra Energy, PetroTal, Valco, which is from Houston, which is listed on NYSE. These are companies that in the last couple of years have all decided to add a secondary listing in London. Obviously, we've had companies do IPOs from the US and North America, like Diversified Gas and Oil, whose assets are entirely within the United States. They decided to do an IPO in London and have grown from 80 million to $1 billion in market cap in the space of 3 years, is now listed on the main market. Again, we cater to all sizes of companies when it comes to oil and gas as well. And the investor base is really broadly geographically distributed, just like it is for mining, as you can see in the lower right-hand chart there. Let me just move this up slightly. So in terms of the top exchanges for energy in the world, LSE is just behind NYSE, but we, from a market cap perspective, it's us and NYSE are, from a market cap perspective, are quite a lot larger than the rest of the other exchanges. And also when it comes to the number of companies listed in oil and gas, NYSE, LSE, and TSX, TSX has a lot of very small companies that are listed, and quite a lot of very early stage companies that are focused on exploration. That is what explains the TSX number. But as you can see, when it comes to oil and gas, London is a very important exchange and on a kind of a global scale. In terms of recent listings from the oil and gas sector, I think the one that Wendy pointed out, I think is really interesting, PetroTal, which actually listed on Christmas Eve 2018, but did not do a capital raising, since then, the company has come back and done 2 capital raising, including one that was done right in the middle of the COVID crisis when the actual company was not operating. It was shut down because of the COVID issue in Peru, and yet was able to come and raise money predominantly from UK investors to bolster its balance sheet. And the company has actually done, pretty well since then from a kind of market cap perspective. But it shows that the capital was there for the company, even when we're in the middle of a crisis and the oil price has fallen precipitously. So that obviously shows you the advantages of being listed as a smaller company. Other ones that are quite interesting, Jadestone was a TSX listed company that came across to London, raised $100 million, and has been very successful from that perspective as well. I think other ones to focus on are Valco, again, which I said, which is headquartered in Houston, and focused on West Africa, because the view is that London investors have a very good understanding of Africa, and therefore we get a lot of listings from natural resources companies focused on those areas. So again, this slide really just shows you the companies that we have dual listed. So you've got the ones from North America on the left-hand side there. I've mentioned some of those, but we have a lot of companies from Canada and the US that are dual listed in London in the oil and gas and mining sector. And we also obviously have ones from Australia too, and from South Africa as well. So dual listings for natural resources companies is something that's very common. And London is attracting more and more every year. Let's talk about listing requirements and process. We've talked about AIM and the main market. They're both underneath the London Stock Exchange umbrella. It's important to understand what the difference is between those 2 markets. Both markets have half yearly rather than quarterly reporting. You can choose to do quarterly reporting if you want. And what I would say is the TSX and New York listed companies that we have that come over to London, they maintain quarterly reporting, but they don't have to do anything extra. They can just really issue their North American filings in London and say, here's a press release, we've just issued our quarterly results in Canada or the US. They don't have to reformat those. They don't have to do anything different or extra from a kind of reporting point of view. We accept what they're doing in Canada and the US for our purposes in London. Now, other things that are different between AIM and the main market. AIM has no free float requirement, but what I would say is there's probably a market standard that you're probably around at least 20% in terms of your free float in AIM, but you have significantly more flexibility on that. On the main market, occasionally you can get derogations to go below 25%. In fact, there's an IPO happening right now, which is about 20%, but that's for a very large company with about a $6 billion market cap. The financial track record, 3 years, no requirement AIM, but if you had 3 years, you would certainly put it in your AIM admission documents. And you would have obviously audited financials. These can be IFRS or equivalent. So for instance, if we have companies incorporated in the US, they often use US GAAP financials. So there's flexibility around that again. Governance, the UK combined code is what is required for the main market. This is from a premium perspective. I would say if you're already listed elsewhere, you would use what you are using already. So we would use a US market standard or a Canadian market standard if you were dual listing across to London. AIM uses what say a recognized code. Typically, companies will use the QCA code. That's a Quoted Companies Alliance code, which is a code for smaller companies focused on the US, focused on the UK rather, and that is less stringent requirements. The combined code, which requires half of your board to be independent, and that you have an independent non-executive chairman. The AIM rules, the AIM requirements do not require that. Significant requirements, and this is why AIM is very good for acquisition-led strategies. On the main market, on the premium segment, in quite a lot of instances, you are required to get shareholder approval for a significant transaction. On AIM, for a large transaction, usually you don't need to get that unless it's classified as a reverse takeover, given the size of that company. So that's why AIM can be a really good platform to execute an acquisition-led strategy. This slide is probably quite hard to read, but it really kind of formalizes those kind of things. I didn't talk about standard very much on the previous slide. The standard segment, which can be for shares or depository receipts. So that could be, for instance, for companies from developing markets who are unable to list ordinary shares, they can list depository REITs on the standard segment of the main market. Standard is usually used by companies that already have a listing elsewhere. So our US and Canadian companies that come often use a standard segment. They sometimes also use AIM. So you can have companies that are listed on Toronto or New York that will also do a dual listing on AIM. But what I would say is that standard is the one that is probably most often used these days for companies that are listed elsewhere. You can do a standalone listing on standard. What I mean by that, you can list on standard and not be listed anywhere else. So for instance, there is currently an IPO going on for a company called THG, which is a software e-commerce company, about $5 billion market cap. That's listing in London, and they're actually going directly to the standard list and not doing premium, even though they're not listed elsewhere. So there's flexibility with regards to that. And in the natural resources sector, we have seen some companies list directly onto standard without being listed on another exchange. So there is flexibility with regard to this. Now, what I would also say about AIM in the main market is that for the most part, the investor base is pretty much the same. So it's not like you have an AIM investor base versus a main market investor base. You have UK equity funds will invest in both, and they won't really distinguish between the two. But what I would say is the difference is that the main market has significant indexes, or I'd say indices for a UK perspective, which track that. So you get significant passive demand if you list on the main market premium, which gives you access to the FTSE All Share, and if you're large enough, the FTSE 250 or FTSE 100, and that can give you access to ETF and index fund demand, which can be quite significant. AIM really doesn't have that much passive demand tracking the AIM indices, so that is one of the advantages to listing on the main market premium over AIM. What I would say is that we typically see companies when they get to say $300–400 million of market cap, deciding to choose to list on main market premium to access that passive demand rather than accessing AIM. Again, these are just some more formal slides that outline the differences between the two markets, but I've really gone into the things that are material. Now, just talking briefly about IPO process, and Wendy mentioned this earlier, and I think it's important to understand, the UK IPO process differs from the US one in that it allows for much more opportunities for the company through its advisors to engage with investors at an early stage. So typically, when we have companies that are looking at doing a UK IPO, right at the start of the process when they've selected advisors, the advisors will take them to meet, or in this case, it'll be a virtual meeting, a small selection of investors in what's called early look meetings to get feedback in terms of equity story, in terms of the investor kind of valuation feedback, comps that they might use. And that is a very important source of feedback at early stage in the process. And quite frankly, companies that can make a decision, do they want to go forward or not? They don't have to go through the whole kind of process of drafting a prospectus and then going to see investors, because when you do testing the waters under the US regime, usually you'll have a draft registration statement ready because you want it to you want it to match what you're saying the testing the waters documents, because the US SEC will have to see hard copies of those testing the waters documents. The UK regulator isn't going to want to see that. And in addition, for AIM versus the main market, AIM does not require the prospectus, for which for AIM is called the admission document, to be reviewed by the regulator, which I think is a key difference. So our main market does require a prospectus to be reviewed by the regulator, which is called the UK Listing Authority. For AIM, it is not reviewed by the regulator. So I think these are key differences. I think the other key difference is we still have deal research in the UK, which is a report that is produced by the investment banks working on the deal, which is distributed, and this is kind of the public process that we're talking about here on the kind of right side of the slide. This is distributed to investors in hard copy before the company goes on its kind of deal roadshow proper. On the basis of that, the investment banks gather feedback and work out where to kind of pitch the valuation to investors when we're going through the roadshow. And so what you find is that IPOs in the UK typically price within these kind of initial filing ranges. In the US, they don't, because the US does not have these mechanisms to refine price discovery because of the regulatory restrictions you have there. So you probably have more certainty about your outcome when it comes to a UK process than you do with regards to a US IPO. And I think that's a significant advantage. And that's why we don't get these big IPO pops in the UK, where the share price goes up 75% on day one, because we have these superior price discovery mechanisms. So, I mean, that was my last kind of slide from a prepared kind of remarks point, but probably what I would say, just to recap, London is a more international market than the US. We have a lot of LATAM issuers that are listed. We cater to much smaller companies than the US. So we can probably go down to 10, 20, 30 million in market cap. The reason why we can do that is because it's much less costly to go public in the UK than the US. In addition, the investor base is much more used to dealing with smaller companies. But having said that, we can deal with multi-billion-dollar companies. As I said, the Yamana Gold is coming to London as a $6 billion company to list. So we can really deal with companies across the board. We have strengths in sectors like tech, healthcare, but also in natural resources. So we can really offer something that the US can't, certainly from a size perspective, international perspective, and a breadth perspective, that I think is something that's unusual. And of course, you know, we also don't have the kind of drawbacks from a litigation risk as well that the US markets have. So I think we can really offer something different that is different from the US exchanges, but also from local LATAM exchanges as well, in terms of access to capital at a cost-effective kind of you know, burden for those kind of companies. So those are my prepared remarks, and happy to take questions.
Thank you, Chris. I've seen some questions in our application here. So I'll ask Miles, Luis, and Rodrigo Llanes to act as moderators for the Q&A session. Please, Rodrigo and Miles.
Hi, Chris. First, I'd like to thank you for what is a very information-rich presentation, which I think we will need to share with all the participants so that they can get a better handle on it, because there was a lot of information in this. But I think there's a number of important points that might need a bit more elucidation. I think the first thing that in my experience people don't understand is when we're talking about very small cap companies that come to AIM, they don't understand who will be the potential shareholder base. They assume, you know, that it's the old Vancouver thing where you have 100 dentists, you know, supplied by one broker. I don't wish to be rude to the Vancouver Exchange, but it doesn't really exist anymore in the same way, so I think I can be. But it was the exchange of the great stock promoters of natural resources. Can you just address quickly why London is different and why institutions are interested in investing in small cap companies?
Well, I think there's this long heritage of doing this, Miles, and I think the point you're making is an important one, that it's a predominantly institutional market, not exclusively so, but I think that there is a much more of an institutional bias in London. There are a lot of small cap focused funds that's what they do. They understand how to invest in much smaller companies. They're going to have much lower market cap and liquidity requirements than, say, a US counterpart would be. And so if you want to kind of draw a distinction between the US and then Toronto and then London, I'd say Toronto, as you're pointing out, especially on TSXV, has a very strong retail focused investor base. The US has very strong institutionals, but they tend to be focused on much larger companies and have quite stringent liquidity requirements. And London kind of fits in between that. So you've got a lot of really well-known institutions, like I mentioned some of the names, Schroders, and you've got BlackRock, and they're running smaller, Fidelity, they're running smaller company funds, which will invest in much smaller companies. And now obviously you have the UK equity funds too, We'll invest in some of the smaller companies as well. So really, I think what really distinguishes the London market, both on AIM and on the smaller kind of parts of the main market, is the quality of the institutional investor base for smaller companies. And it's been like that for a long time. And what I'll also say is that historically, the UK did not have, as when we talk about tech and life sciences, did not historically have that in advance of a VC community, and AIM actually had to step in and provide that capital. So companies in the US would be funded by VC money. They'd be getting, you know, $10–20 million of Series A. They would actually be going public in London and getting that money through the public market. And that really still exists today in a way that it's pretty much died out. If you look back, you know, 20 years to the US, actually you would see a lot of really small IPOs in, say, you know, the late 90s in the US. That really doesn't happen anymore. It still happens in the UK. So this week, we saw a digital health company raise $20 million, and, you know, with a kind of an $80 million market cap, and it probably has $10 million of revenue. And so that just shows you what kind of activity still happens in London that really doesn't happen elsewhere. And I think that really is a kind of a distinguishing factor.
Excellent. And perhaps if you could explain how that having a very early institutional client base or investor base translates into the ease of follow-on financing. I mean, I'm a man who had an environmental technology company with 5 venture capitalists involved, and it ended up as the most complicated part of my life, as they all got in a fight. Yeah, so
yeah,
it's worth talking about the difference between listed equity and venture capital, because a lot of people say to me, but it's far too early. Why aren't we doing a Series A and a Series B and following the US model? And I often am trying to explain there are alternatives.
So I think I actually brought up the slide again because I think it's very important. The COVID crisis has actually really emphasized the benefit of being a listed company as a smaller company. Because what we've seen is a lot of companies were able to come back to the market and raise capital. Some for like positive reasons. Some were like, oh, we've got growth opportunities during this COVID crisis. And some were, oh, we need to shore up our balance sheet. So what we've seen in the UK is that companies are able to come back and raise money on an accelerated basis, on an undocumented basis, usually up to 20% of their issued share capital. So they didn't have to do a prospectus, and literally they were able to get this money within 24 hours. So they were announced, we're doing an accelerated placing, and within 24 hours, they were able to have that money basically in the door because the investor base was there for them to be able to do it. So page 4, as I put up, actually highlights it, and it also highlights how this was pretty much across every sector. And I would say even worked in energy. So I mentioned PetroTal, which was a company which was not even operating. They were closed because of what was happening in Peru. They were able to raise money. So if you look on the energy side, PetroTal is actually included in that number. They were able to raise capital during the crisis. But obviously we had a lot of companies, and say healthcare was very popular during this crisis. Those companies were able to raise capital. Now Wendy had a slide which I think bears talking about as them, because it really talks about the difference between the US and the UK. So this slide focuses on companies with market caps below $1 billion. IPO and follow-on capital raised during the first half of 2020. If you look in the UK, it's broad-based across all kinds of sectors. So no sector predominates. If you look at the US, 86% of the capital raised by companies in the first half of this year with market caps below $1 billion was in healthcare and financials. And actually you can narrow it down more than that. It was SPACs for IPOs, and for follow-ons, it was biotech. And it was pretty much nothing else going on. So in the UK, broad-based, from a sector perspective, companies able to come back, raise capital very quickly. That's one of the advantages of being a publicly listed company, and also shows the UK has a really different kind of perception of what it wants to do from a small cap perspective relative to the US, where, as you said, if you are looking to raise capital quickly, with VCs. That is not a straightforward thing to do. In the public market, it should be, and we can actually show that it was in the first half of this year.
Excellent. I think that's very relevant. One of the questions in our chat is, could you talk a little bit more about the fintech sector?
Yeah. Or just in general, yeah, of course.
just in general. I mean, the question is, we know there's an important ecosystem in London. Fintech's developing in Mexico. So perhaps you could give some examples about what might be interesting to international investors and perhaps what might not be.
Yeah, I mean, I think that we can actually, I can talk about a specific example, which is on this slide. Boku, which was founded in San Francisco. Now, this is a company which is VC backed, and the VCs are famous VCs. Andreessen Horowitz, Benchmark, Khosla Index, and NEA. This company went public in late 2017 in London. It probably had about 17 million was historic, probably about $25 million of revenue is what it was run rate was when it went public. The reason why it went public in London is that it's very hard to go public in the US as a $165 million market cap company. In London, that's kind of a normal thing to happen. And it's actually been able to raise further capital since then and do acquisitions. The VCs have been able to sell down. What this company does, it actually is, if you buy something, you're able to charge it to your mobile phone account. And this is actually big in strange, countries. So it's big in, say, Africa, actually in Latin as well. It's big in Japan. It's actually big in Germany. Places where you don't see a lot of credit card usage typically. So this company has really benefited during the crisis because they have a lot of business for people buying things, through apps, but also through games. People are gaming and they're actually buying things. This company has really prospered during the crisis. So that's just one example of a fintech that is foreign, which has come to London and really prospered. But I would say there are also a number of the payments companies that have done very well in the UK. So one that was actually acquired recently, SafeCharge, was from Israel. They did a lot of payments processing for gaming websites. They were a fantastic story that did really well in London. An IPO from last year, Network International, another payments company that's focused on the Middle East. So I think what I would say is there's a lot of interest in developing markets fintech companies that are, looking to do things in the they don't have to have anything to do with the UK whatsoever to be of interest to UK investors. And so I think that is the important thing to say. I think there's a lot of interesting areas like remittances, transfers. I think there's also a lot of interest in actually back-end software for financial services. So you're providing the plumbing for banking. There's a lot of interest in those areas too. Cybersecurity has been an area which I think is related to fintech that people are very interested in well. And what I would say is in the UK at the moment, we have a number of private VC-backed companies who are banks, basically. You can think about people like Revolut and TransferWise and those kind of areas, Monzo, which are kind of seen as the next wave of fintechs to come. But actually the UK over the last 5 to 10 years had a lot of what we would call challenger banks, which are able to go public. So people like, you think about Virgin Money, think about Metro Bank, have already gone public, which are trying to disrupt the kind of existing concentrated banking system in the UK. So I think fintech is something that has a very long kind of history. Obviously fintech suggests it's something relatively new, but because of the strength of the financial services industry, and also I think the relative kind of willingness of the regulator in the UK to be open to new ideas, fintech is something that's really strongly welcomed in the UK. And actually, we've seen a lot of public market opportunities there. And I think that's something that investors would be interested in seeing companies focused on developing markets like Latin America in the fintech arena coming to London to raise capital.
Yeah, I think that's a very fair response. In my experience, there's a bit more emerging markets risk tolerance in London than there are in other markets, simply because these markets tend to be better understood. I'm going to ask you another question from the chat. Always comes up. What about Brexit? What's going to happen? Is it going to affect? the London market?
That was my.
Well, I think that I would say to that is that, you know, when you had to put up a slide where we said we've had 52 listings in the Americas since 2017. Now, we had 4 in 2016. So if you divide 52 by 3, it's a lot more than 4. So what I would say to you is something kind of strange happened in that the UK has a very, very large investor base, and it's not really going anywhere. You know, we're probably second or third in the world in terms of kind of dedicated AUM, especially when you talk about UK equity funds. What they suddenly wanted to see is companies with international exposure, certainly companies with non-sterling revenue exposure. And actually, when you look at the UK market as a whole, I think the sterling exposure of the UK market is something like 30%. So it's actually very low. The dollar is probably just as important in terms of the exposure of the, you know, the underlying revenue exposure of the companies. And we have lots of companies reporting dollars, by the way. And the investor base wants to see that. So what I would say is that there is the appetite there. There's going to be the capital there. And certainly when you've got Brexit mixed with COVID, I think it'd be very hard to say a retailer to be looking to do anything now. But if you've got a technology company, say a fintech company, which has exposure outside the UK, I think there'd be a lot of appetite for a company like that, even with Brexit. And that's why we've seen a big increase in the amount of international focused IPOs that have come to London. In fact, if you look at last year, 3 of our top 5 largest IPOs were international companies. In 2017, it was 9 of the top 10 were international companies. So what Brexit has really capitalized, if I can use that as a verb, has been more interest in international companies or companies with international revenue. Because when you actually look at London, there's a lot of companies that are UK PLCs or UK incorporated. When you look at them, they're not really UK companies at all. They're actually international companies and have very little UK revenue exposure. That's the kind of company that investors are going to want to see post-Brexit.
Excellent. Well, I don't think I've got any other questions. Rodrigo?
Yes, I would like to ask Chris, well, first of all, thank you for your presentation. It's been really informative. Here in Mexico, we do not have a lot of contact with LSE AIM, and this has been very important for us to learn the differences and the advantages of the LSE AIM. We have always, as we are very close to the US and most of our trade, about 85% of our trade is directly to the US, that we have a lot of influence there. So it's not common for us to learn about this. So really thank you for this great presentation. I have a few questions, but first let me ask one of the audience that is related. I know that you mentioned in the presentation about IFRS and GAAP standards for accounting, and our friend from Philadelphia, David Gibbons, from FENG, is asking that if the London Stock Exchange works with IFRS, and if this would enable the companies that are listed there to speak in the same language with market participants.
Yeah. So you know, IFRS is what is predominantly used in the UK market, but you don't have to use that. So for instance, we have US companies and Canadian companies that are using US or Canadian GAAP, and investors are able to translate across that. That's usually, I mean, when we see companies using US GAAP, it's because they're Delaware incorporated usually. But you can, by the way, we've seen, for instance, Boku decided to change, even though it's still Delaware incorporated, they decided to change from US GAAP to IFRS, but they didn't need to do that. And I can point to plenty of examples of US companies listed in London that use US GAAP. But predominantly, and certainly if you're listed on the main market in premium, you'll be using IFRS.
Okay, thank you. And regarding the ESG standards, the environmental, social, and governance standards, could you please tell us or widen the commentary on that? How is the LSE aim regarding these the companies that are already making progress on these issues?
Yeah, that's a really good question, actually, and I could have had a completely different section of the presentation, but it would have been way too long. Now, what we've done a lot of things with regards to ESG, and actually, you know, from a debt perspective, we've started the Sustainable Bond Index and bond market in London. We actually won Sustainable Stock Exchange of the Year in the Sustainable Finance Awards last year. Now, the reason why we won that is because we've introduced something called the Green Economy Mark, which is something for equity issuers. And basically, it enables companies who generate more than 50% of their revenue from green sources. And we own FTSE Russell, so FTSE Russell are able to do the classification. They look through the you know, the revenues of the company to determine how green they are, and they have a whole classification system. And by the way, after this, I'll actually send you a separate presentation on this, because I think this will be worthwhile sharing with the people on the call. You know, we enable companies to have this kind of green economy mark, to say we are predominantly you know, a company that's generating our revenues from green sources. And FTSE Russell are the ones that assign that. We even had a company called Callison, which is a smart metering company owned by KKR, do an IPO earlier this year, and they got the Green Economy Mark before they IPO'd, and they used that as a key part of their marketing in the you know, the kind of part of the IPO marketing, to show that they were doing something from a sustainable finance perspective. So what I would say is the way to look at this is I think it's more carrot than stick. So we're not saying to people, you need to be more sustainable, but what we're saying is investors are more interested in this. We're going to enable them to have more information. You know, we're going to have, and you should be looking at our standards to produce information that enables investors to benchmark you. And we've got, obviously we own FTSE Russell. Part of FTSE Russell's job is to enable the investor base to have better information and be able to benchmark the ESG criteria of their investments. And so we're saying, with an increasing amount of money being directed to ESG, if you follow these kind of disclosure guidelines, you're going to attract more investors to invest in you, because you're seen as having best practices from an ESG perspective. And this is one of the things that the Green Economy Mark does. And so we have, I think, about 70 companies that qualify for this. We were listed in London now. I think about half of those are on main market, half are on AIM. So this is not just something for big companies. And some of those companies are actually in some strange sectors as well. So you don't have to be a renewables company to qualify for the Green Economy Mark. It can be doing things like actually reducing emissions in a traditional industry. So I think it'll be worthwhile for me to share a specific presentation on that, because we have some very interesting material. And it's just way too much to go into on this call, to be honest. It could be a completely separate webinar just on that subject.
Perfect. Let's get in touch after today, and maybe we can organize something for November. There's one more question that I would like to ask you, Chris. Regarding COVID-19, yeah. You see, this has changed our lives. You see, it's something that is affecting the lives of everyone. And the question would be, how have you seen the impact of the COVID-19 with the process of companies listing in the markets and the process of you mentioned in one of your slides that there's an education process, yeah, for those that are going to be listed. In COVID, we have moved from all the head-to-head meetings to video conferences and this, but I don't know how effective is for when a company is going public, this type of communication.
Well, I actually think that this is here to stay, personally, and that people have been forced to get used to it, and they have got used to it. And actually, I think that people can see that there are some advantages. It certainly, as me, sitting in New York, when I'm pitching to companies now, I can say, actually, okay, I mean, post-COVID, you will spend some time in London, but I think probably you'll be able to spend less time in London than they used to meeting with investors, because they'll be more used to having these kind of calls. And I think that's a really good thing, actually. And we've had a number of IPOs now that have been executed that have been done pretty much entirely virtually. I think people are slowly going back to the offices in London. And obviously in the US, they're not. In Argentina, where Miles is, they're not. I assume in Mexico, I don't know what's going on in Mexico, to be honest, but I suspect that there are actually significant advantages to doing an IPO this way, because a lot of what you do is actually wasting time traveling. You can actually fit more investor meetings in now by doing this. And you can also see investors in different places that you probably wouldn't have thought of. So sure. A lot of people would say in London, it's London and Edinburgh are the main centers in the UK, but you could also look at people in, I'm from Manchester, you could look at Manchester, you could look at high net worth networks in places like Manchester now, and probably be a bit more thoughtful about that than you were in the past. Now, with regards to the US, you can look at Denver, you can look at Salt Lake City, you can look at all kinds of places. You can selectively pick some investors you probably would have ignored before. And I think that this makes these things a lot more democratic, actually. And so, this may be one of the unintended positive consequences of what's happened, is that we'll have a IPO process which is actually fit for purpose for the 21st century, because a lot of things had not changed in a long time, been very manual, very paper-driven. Now, actually, we can be a lot more virtual. I'm sure once COVID is over, there'll still be plenty of conferences face-to-face, and there'll be lots of there'll be IPO meetings face-to-face from time to time, but I think there'll just be a lot less in general. I mean, I think that's a good thing.
Can I elaborate on that?
Yes, please.
What I'm finding from a Latin American perspective is obviously, the previous method was to decide on your business plan, your presentation, and then go and meet the brokers. We work as nominated advisors, as Chris probably doesn't know, but he's kindly mentioned Petrotal multiple times. We are their advisor. And it's been very easy to do secondary issues for companies that are already listed, even during this COVID period, what has also been very much facilitated is if you want to form a broking syndicate, you work with your advisor, but you don't then have to go and spend a week in London seeing 20 brokers or 10 brokers or whatever, depending on the size of your deal. All that can be done virtually, and your broker can come back to you, or your team of brokers, and say, well, we've spoken to the market, and in principle, there's interest, and there's interest at this kind of valuation. So you can get a lot more information for very little cost, if potentially no cost, before you have to put your whole executive team on a plane, spend 5 days in London with everything that entails. So in some ways, it's actually facilitating the start of business. I would still say that in order to do an IPO, you need to sit in front of your lead investors or your potential lead investors. But even that may change depending on how long this situation goes on. The hotel chains will be very upset in London if that does change. I'm not sure the banking system will be at all upset.
I agree.
Another question that that I must ask is, how do you see Mexico? How do you see Mexico as an investment place? How do you see the companies we have here? How do you see our environment, political atmosphere, etc.? How do you see Mexico, both from New York and London? Please.
Yeah. So, I mean, I think Miles will have his own views on this, but what I would say is the following is, I don't think that from a political perspective, being here in the US, or even think about London, that we're really in a position to criticize Mexico in any way from a political perspective, because I think, what has changed, I think, about the US and the UK is there's been a lot more volatility in the political environment over the last few years than we've seen in a long time. I think that, Mexico, what I would say about Mexico is that, people may argue about how business friendly the administration is there, but what we have seen is that, for instance, from a venture capital perspective, there's significant amounts of increase in venture capital investment into Mexico. I think basically probably second to Brazil in that regard, and that creates a massive opportunity because these companies are going to need viable routes to liquidity, be that M&A or, quite frankly, they definitely need functioning public markets. Now, the question is, does Mexico have that at the moment? Probably not. And so we think we can maybe act as a bridge to that, maybe alongside the domestic market to provide some capital from the UK, but also encourage, the kind of development of a domestic investor base in Mexico, which can also support those companies, which has happened to a certain extent in Brazil. I mean, I would say it's still very hard to do a small cap IPO in Brazil, actually, not in the way that you could in the UK. And so what we're trying to do is help, companies from Mexico, because it's a lot of innovation. There's a big opportunity we see there, and that's why we want to focus a lot of time on places like Mexico. I'd say, in addition to that, clearly on the natural resources front, there is a lot of interest. We have companies already listed from Mexico. That's going to be an opportunity down the line. So I think you can almost put, not completely, but almost put the political environment to one side and just say, let's focus on the vast opportunities there with innovative companies in Mexico. There will be opportunities to get these companies capital, so let's work on that. I don't know, Miles, if you have a view.
I just think it's worth remembering that the London Stock Exchange is traditionally the home of African countries. And so when we're talking about political uncertainty, we have a very sophisticated institutional client base that has been used to dealing with it, political uncertainty. The kind of uncertainty we're seeing, apart from unfortunately in Argentina where I live, doesn't really live up to the political uncertainty that we're used to experiencing in Africa.
Yeah, I mean, I think that's the thing. I think that certainly a place like Mexico is much more. I think is much easier to understand a lot of African jurisdiction. Mexico, in lots of ways, as you said, it's part of North America, and that's the way that the investor bases really see it, because there's just a degree of sophistication, which I think they'll be very happy to see and welcome.
Is there any sectors that you have detected from international investors that would be that would have a special appetite to invest in Mexico in any sector?
Gold.
Okay.
Everyone's looking for gold, near production gold assets at the current prices are obviously the most attractive.
So I'll add to that. So things that we've seen recently, we've seen later stage development, so not producing yet, but close to producing on gold. I think that there could be battery metals is something that could still be of interest. I just think it really depends on the quality of the project. And so you could look at lithium, copper, you can look at nickel as examples as well. Rare earth stuff is obviously quite interesting too. But definitely, you can look at tech and life sciences. It's just, I think on tech, there will be companies from Mexico that are interested in coming out. Oil and gas, I think it really is at the moment. It's hard to see it just because of where the oil price is, but down the line, we'll just have to see how that evolves. Yeah, I mean, but quite frankly, what I would say is, and I'll be surprised, recently I have had a lot of incoming from existing listed companies in Latin America across all kinds of sectors, so consumer, construction materials, even financial services, that are looking to broaden their investor base by looking to London. And these companies are probably small to mid cap, so a couple of billion-dollar type companies. And they're saying, we're not getting enough out of our domestic listing. We're maybe too small for the US. Can we look at London? So I would say that no, there's no real sector that's off the table. I think when we're looking at smaller companies, it tends to be tech, life sciences, and natural resources. But really, we have an open mind, and I think the investor base has an open mind as well.
Okay, thank you. And regarding the question made by our partner Armando Micumbo about the fintechs, as far as I know, the United Kingdom and Mexico have among the most advanced legislation in that regard. And I think that that is why we are in Mexico very proud that, well, this is a legislation that is very advanced for many other countries. And would you think that in the fintech sector we would have special opportunity because of the legislation we already have, that is that it was based on the United Kingdom?
No, I definitely think that. I think that the UK has been at the forefront, so has Mexico, in terms of like the ability for companies to innovate and regulators to say, okay, we're monitoring this, but we're not going to interfere and kind of try and stifle it. And so, as I said, the UK has had a lot of things that have happened with regards to new entrants to the banking system, and that's been pretty successful so far. But also things like compliance, things like identity checking. I think it's a much broader base than people realize. It's not just about having competition in the banking system. It's about all of the kind of plumbing that goes behind that, KYC and anti-money laundering, for instance. The UK has some really interesting companies, invoice factoring, alternative sources of finance away from the banking system. I think it's just all kinds of stuff that's happened, and I think that there's lots of opportunity for that in Mexico too, actually. And I've actually come across quite a few companies in Mexico which have been doing innovative things like, providing, alternative sources for financing for SMEs, as an example. And I think, there's lots of interesting companies in Mexico in those kind of areas too.
Thank you. Well, Chris, it's been great this time we've had with you. We appreciate very much your generosity and your support for making this happen. Also, we thank Wendy for her participation in this conference, and in a very special way we also acknowledge our friend Miles Lewis for organizing and get us in touch with you for this presentation. Would you have a final comment on this presentation? And we look forward to seeing you in November for going deep into the ESG and green economy.
Well, just to say thank you, Rodrigo. I found it really helpful, and I really thank you for the invitation. I thank Miles, I'll thank Jesus as well for his introduction and moderation as well. I think it's been incredibly useful and helpful. I just want people to remember, I think Mexico people naturally look to the US, which of course makes a lot of sense. But I think that they, by doing so, you may be narrowing your options. London is a really international market and is always looking for interesting companies. And as Miles has said, the investor base is comfortable with companies which are from many different markets. And Mexico is a very sophisticated market, and they'll be very comfortable with investing in companies from that. And I would also say that people always think that London is expensive. When it comes to capital markets, London is not expensive compared to the US, and actually probably compared to doing a listing in Mexico, quite frankly, as well. So we can really offer cost-effective access to capital to a very, sophisticated investor base for companies of all market cap ranges in all kinds of sectors. So I think the one thing I would say to people is just remember London is there, and if you need more information, reach out to me and Wendy, and we'll help guide you through that process.
Thank you. Thank you so much. Miles, please.
I think a final comment from me is the other thing is Mexico is a great fun place to go and visit. So we should be down there for a marketing trip as soon as we can.
Yeah, and you'll be very welcome. So we hope to see you soon here with all the social distancing and face masks, etc., if needed.
Which never works after a few tequilas.
Well,
so we'll
Oh,
just
no.
have to go for herd immunity.
yeah. We'll see for that.
Chris, I'd just like to thank you very much for participating in this, and look forward to talking to you soon.
Thank you, Miles. I really appreciate you setting this up. Thank you, Rodrigo.
Thank you, Chris, Miles, Wendy.
Thank you
Thanks
very much.
to all of you that participated in this great exposition. And thank you to our partners, COMCE, Club 51, FENG, and Mundo Ejecutivo for their partnering with us in the presentation of this event. So, Chris, I look forward to seeing you soon, and we'll keep in touch because you have opened our eyes in many ways for the London stock market, and we'll look for helping some companies to reach the London Stock Exchange. Thank you.
Yeah.
So we've got a
Thank you very
great
much.
day. Muchas gracias, Jesús, por participar en la introducción y apertura de esta junta. Gracias a todos. Como es nuestra tradición, les pido por favor que abran sus cámaras y micrófonos y le demos un fuerte aplauso a Chris, a Wendy y a Miles por esta presentación.
Thank you all.
Muchas gracias.
Thank you, Miles.
Thank you.
Thank you all.